Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. U.S. futures surge as a U.S. trade court blocks most of President Trump's global tariffs, saying they were illegally imposed under emergency law. Upbeat forecast. Nvidia's results stoke market sentiment, soothing fears over China's slowdown with a solid sales forecast. And Aramco exclusive. I sat down with the oil giant CEO Amin Nasser to discuss the global growth outlook and production as OPEC Plus prepares for its next output decision.
We benefit because we do have spare capacity. So more barrels come to the market. For every million barrels, that will have a huge impact on our net income.
Well, it has just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. Quite a few of you reached out to me the last couple of days asking me where I was, if I was taking a couple of days off after Qatar Economic Forum. That was not the case. As you just saw, we were in Saudi Arabia for an exclusive with Aramco. So we're going to play a bit more of that tape throughout the rest of this show, and also a preview ahead of a special episode that we have been working on that's going to air in a couple of weeks' time. So more of that throughout Horizons today. But for the time being, let's go back and check in on how markets are faring. As you can see, a lot of green behind me. Take a look at the S&P up 1.6% futures today. NASDAQ up almost 1.9%. This after a little bit of a dip yesterday. Two drivers this morning. Strong results out of Nvidia despite some of the export bans and restrictions into China. The forecast, the guidance was pretty positive, in line with expectations. So you had strong results from Nvidia. In addition to that, the latest out of not the Supreme Court, a trade court ruling that tariffs that were imposed by the Trump administration, most of them were illegal. Now, the Trump administration has decided to appeal that. Ultimately, the decision will be taken by the Supreme Court. But bottom line, the markets are reacting quite positively because it increases the likelihood of some of these tariffs getting watered down, or even possibly reduces the likelihood of the Trump administration being able to demand high concessions out of trading partners. So net positive result for markets here. 30-year yields keeping a close eye on what's been going on, not just on 30-year, but 10-year as well. But 30-year very close to 5% again as well. 4.98 is where we're at, about 1.5 basis points higher. And then Brent, all eyes on the energy complex. So sitting at around $65 here, 1.2% higher as we head into another important OPEC Plus decision this weekend, and the possibility of another increase in production of more than 400,000 barrels a day is what market watchers are talking about. So this is the recap of markets. Let's also check in on how markets in Asia are faring. Huang is in our Singapore studio. Avra, what are you watching out for today?
Yeah, Jumana, markets are running higher in this part of the world against the backdrop of what's seen as a body blow to Trump's tariff and economic agenda. And included in the mix of stocks that are gaining includes the Apple suppliers. We're also seeing that Nvidia earnings kind of sprinkling optimism around. We have South Korean stocks outperforming today. The BOK cut by 25 basis points. This was as expected. The governor also hinted at larger cuts to come, separately confirming that Asian countries had currency talks with the U.S., although we have the likes of Mizuho saying that this is unlikely to offset the impact from dollar strength. Of course, the greenback has been climbing. Part of this today to do with that tariff ruling. Jumana.
April, all about that tariff ruling, indeed. So let's talk about it. The Trump administration says it will appeal a U.S. trade court ruling that most of the president's sweeping global tariffs are illegal. The decision blocks a key pillar of his economic agenda, at least for now. For more, let's bring in News Desk editor Jill Desis. Jill, so what are the implications of this court ruling at this point?
Well, Jumana, I mean, this is a pretty significant ruling here. Obviously, will not be the end of the tariff story, as we know, given the fact that the Trump administration is trying to appeal this. But what this kind of stems from is legal challenges to the vast majority of the tariffs that Trump was enacting under executive orders via emergency powers. So while this doesn't apply to some of the stuff that was implemented under the U.S. trade regulator, so things like the steel tariffs, aluminum tariffs, and everything like that, what it does apply to are a lot of those sweeping global tariffs that Donald Trump announced. You're looking at a lot of the China fentanyl tariffs, some of those additional higher tariffs on places like China, Canada, Mexico. So, I mean, that's a pretty broad set of those tariffs that this ultimately applies to. Now, of course, this is one court. I'm not a lawyer here, but just to kind of walk you through a little bit, this is a U.S. trade court that's part of the federal court system. So avenues for appeal here. Obviously, the Trump administration is trying to fight this. So, they'll try to take this to a federal appeals court. And then what that means is that this is something that I would imagine is probably fairly likely to end up before the United States Supreme Court for an ultimate decision there. So, yeah, I mean, certainly a setback for the Trump administration right now, but not the end of the story.
Yeah. So you've walked us through perhaps how the Trump administration could respond and ultimately that the decision may end up with the Supreme Court. But imminently, as I understand as well, and I don't have a legal background, they now have 10 days to cease collecting tariff revenue. So is that likely to affect the trajectory, maybe from a fiscal perspective as well? We know that this big, beautiful bill has been passed. Is there a correlation between the tariff revenue collection and fiscal decisions?
Yeah, I mean, I think that, that 10-day order there is certainly very interesting. I would, actually, I'd be kind of interested if, anything ends up before federal appeals court that kind of supersedes that, right? I mean, you have to imagine that if you're the Trump administration, you're trying to get a stay of any ruling that, implies that they should stop collecting revenue on tariffs at the borders. So I would look out for, sort of imminent court action there. I mean, this is the kind of thing that you'd have to imagine would get fast-tracked. So I think that's still an open question. We didn't get a whole lot looking at that, that 10-day ruling. We didn't get a whole lot of specific directions or steps that, the court is saying that the government should take to unwind those tariffs. And again, I think we're still kind of open to the potential here of whether or not that actually gets stayed as this does kind of work its way through whatever appeals process ultimately exists there. So, but yeah, I mean, to tie it back though to, the tax bill, that Trump's obviously been trumpeting pretty heavily. I mean, a whole piece of the tariff equation was that revenue collected from a lot of these big global tariffs that Trump is trying to implement, is kind of intended to offset some of the effects of, continuing a lot of his Trump 1.0 tariff tax breaks. So I think that's tax breaks. So I think that that's something that's really an open question there. We're still kind of waiting to see how this is going to resolve.
Yeah, well, the reaction in markets is positive. However, as you can see, futures, a sea of green this morning. News Desk editor Jill Desis with the latest there. Well, Saudi Tadawul Group and the Hong Kong Exchange are co-hosting the Capital Markets Forum at the HKEX. It comes as Saudi Arabia and Hong Kong pursue deeper capital market ties in order to boost liquidity and stimulate cross-border investments on both sides. I'm really happy to say that joining us from the event is the Saudi Exchange CEO, Mohammed Sulaiman Al-Rumaih. It's really good to speak to you again, sir, since our last conversation. And of course, last time around, we were talking about the fact that there have been a number of ETFs launched looking to increase trading between Saudi Arabia and Hong Kong. I believe today there's going to be an ETF tracking Saudi government bonds also being launched as well. What is the business objective here?
Hi, Jumana, and good morning to your audience. So today we've launched an ETF with the underlying of the Saudi government Sukuk. And it ticks many boxes. For us is having more ETFs, and it's part of a collaboration between the STG and Hong Kong Exchange. Another thing is, as part of our development on the debt market and the local debt market, this will ensure increased liquidity and also to educate the international investors about the many ways in how you can invest and get exposure to the Saudi government Sukuk issuances.
Yeah. How are the actual trading volumes? I know that the volumes were high out of the gates. And what does it look like, 12, 18 months later now?
The liquidity is great, driven by the performance of the ETFs. So we've listed 2 ETFs last year, the biggest in our market. They've been performing very well, both of them, and I think it's encouraged the fund manager and some of the local asset managers to look into having a more specialized ETF with exposure to Chinese companies. This is part of the discussion we're having today. I think we have progressed very well. We believe we'll see something in the near future.
Yeah. Are there any signs of cross listings? Is that something that you're working on, having discussions around that?
So on the cross-listing side, we just recently published the depository receipt framework for public consultation. This is the most efficient way for any company to cross-list, and will pave the way if there's any company from Hong Kong or from any other reputable market want to cross into Saudi. This is the best framework to apply. For us, we are enjoying a very healthy IPO pipeline. Any company looking at the oversubscription that our companies are enjoying, the aftermarket performance as well. It's for us to be very selective, and we want to have the best companies that is aligned with our goals at the STG, at the Saudi capital market. But we are certain that many companies will want to cross-list in Saudi.
Yeah, and you mentioned the healthy start to the year from an IPO perspective. I believe so far about $1.3 billion has been raised. What does the pipeline look like for the rest of the year?
Well, very promising. So in 2024, we became number 1 globally in the growth of number of listed companies with more than 14%. And year on year, we are doing 20 or almost 30% more than the last year. So we'll probably be holding the same position this year. We've done 23 IPOs, 6 in the main market, and we have 24 approvals from the regulator. Then we expect more approvals to come. The good thing is they are, like last year, from different industries, different sizes. I believe it will keep the interest going on about the Saudi market.
Yeah, it's interesting with the ongoing diversification of the Saudi economy. What you're seeing is new industries enter into the IPO and look to do listings. Last year was a big year for the food and beverage industry. Which industry do you think is going to be the leading industry in 2025?
I think we'll continue seeing companies from the telecommunication, from information technology in general, from real estate and real estate development and real estate sector. We've seen the first company working in perfume for the first time this year, and there is an offering on the aviation. So we will continue to diversify and be more reflective of the Saudi economy.
And what about the investor pool? Are you seeing increasing interest, demand out of foreign investors? And if that is the case, are you looking to perhaps ease some restrictions or trading restrictions in order to bring more outside money in?
Yeah, we've seen a great growth in foreign investor trading activity. Now they represent from 25 to 30% compared to maximum 15% last year. This is a result of our investment in our infrastructure, so they're now more familiar with the infrastructure that is similar to most developed markets. This will continue to increase. When it comes to their holdings, they've also increased by around 9% compared to last year. And as we are increasing the IPO, this will have an impact on our weight in the international indices. If the regulator decided to ease the rules that is governing the QFI, this will definitely help. We've seen what happened when the regulator allowed investors to invest in the companies working in the two holy cities. So, I mean, the regulator have eased the requirements maybe 5 times since they launched back in 2015. Maybe they will do something this year or next year. This depends on many factors. But what we are hearing from the investor, they want to invest more. Every week we have new investors investing in our market. I think with the good momentum of IPOs, the development we're doing into our markets when it comes to the regulation technology, this is also more reason for them to increase their exposure to the Saudi market.
That's a good place to leave it. Sir, thank you so much for your time. Mohammed Sulaiman Al-Rumaih, CEO of Saudi Exchange in Hong Kong. Well, coming up, we discuss the state of the U.S. economy as the Fed pursues a wait-and-watch path amid tariff uncertainties with our guest Ketaki Sharma next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Nvidia shares jumped in late trade after it soothed investor fears about a China slowdown by delivering a solid sales forecast. The company expects revenue of about $45 billion in the second quarter, and that is despite new export restrictions costing about $8 billion in Chinese revenue. CEO Jensen Huang told us the AI computing market is still poised for exponential growth.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
And it's not just Nvidia dealing with the trade war. Tariff uncertainty is impacting economies and companies worldwide. As a result, Fed officials are pursuing a wait-and-watch path. For more, let's bring in Ketaki Sharma, founder and CEO at Algorithm Research. Always good to chat to you. I'm going to start with the big news of the day and the fact that this trade court has ruled the tariffs to be illegal. Obviously, this opens up another massive Pandora's box. We don't know how this is going to end up, but the reaction of markets today has been pretty positive. If it is the case that tariffs are indeed illegal, how do you expect the Fed to react to this news?
Well, first, thanks for having me. I think it's a lot of drama happening at the moment, and the Fed would obviously want to wait and watch for data, as it's specified in its FOMC minutes meetings. I think it's going to be really, their approach to it would be really data dependent. They don't have much of room there. So even if the tariffs are put on hold or totally scrapped, it's going to be totally data dependent for the Fed, because it's going to be independent and not really dependent on what the U.S. government fiscal policy is announced.
What is your read on the data that's been coming through from the U.S. economy? Again, people continue to draw the distinction between the soft data and the hard data. Mm-hmm. Is one going to catch up with the other?
For now, data has been really positive on the ground, especially on the growth side. Even the sentiment data that came out was good. But we have been watching something that is interesting. The first release has been positive, and it's been revised down consistently. And that's something interesting. And the markets tend to react to the first release. So we get a good response. And then when the revised estimates come, markets do not show a reaction to it. Yeah. So that has been something interesting and away from normal.
The other thing that I think is interesting is consumers are very sensitive to, again, real-time data. Mm-hmm. And one thing that has happened the last few months is inflation expectations have started to tick higher because of the anticipated impact of tariffs. But I do wonder if these tariffs are deemed to be illegal, then maybe we could start to see inflation expectations tick lower, in which case there's less pressure on the Fed to keep rates high. They can actually start focusing more on the growth mandates.
Well, you're right. But what has happened already is that there's so much of on and off that has happened that and media tends to focus more on the negative because it can be sensationalized. My worry is that that the consumers tend to start to believe that this might happen for sure. Every time they go to a retailer and they see higher prices, they might start to justify it in their heads, saying that this is because of tariffs. And that's consumer expectations. Now, once the retailer starts to know that they can actually get higher prices because consumers are factoring that in. Now, that's a dangerous sign because that leads to profit-led inflation. And that was something that happened during, post-COVID. And it's a scary sign because, consumers are suffering, but there will be supernormal profits.
What do you think about the rise in bond yields and the fact that 30-year yields are back to 5%? What impact is that going to have on broader sentiment? And obviously, the mortgage market is a big market in the U.S. What knock-on effect are these higher interest rates going to have?
A couple of things. So there is, of course, when we talk about bond yields, we talk about inflation and we talk about the fiscal policy. Now, there's so much. Earlier, we used to have guideposts to any kind of policy. Now things have changed. There's this one source of fiscal policy, and that can, there can be a retreat anytime. So there's so much uncertainty that the markets are reacting to it, I think, at the moment.
Yeah. Okay. So finally, what do you have penciled in terms of Fed rate cuts this year?
Well, I know the markets are penciling in 2 rate cuts, but I think the way things are going and with so much uncertainty, I would say there should not be any rate cuts. So that's my view.
That's your call. Yeah. Okay, no rate cuts. Let's see. We've got 6 months. Ketaki Sharma, founder and CEO at Algorithm Research. Always good to talk to you. Thank you. Now, Elon Musk says his time as a formal advisor to President Donald Trump is coming to an end, raising questions about the future of the Department of Government Efficiency, the DOGE effort he spearheaded. Musk's campaign to slash the size of the U.S. government has sent shockwaves through Washington. The initiative has also fallen short of its own high expectations for cost savings. Now, still ahead this hour, some of my exclusive interview with Aramco CEO Amin Nasser on how the oil giant is prepared for output hikes ahead of the latest OPEC Plus decision. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. U.S. President Donald Trump said he has told Israeli Prime Minister Benjamin Netanyahu a military strike against Iran would risk disrupting efforts to broker a deal on Tehran's nuclear program. Trump believes a deal with Iran could be completed within the next couple of weeks. Tehran also says it would consider allowing the International Atomic Energy Agency to send U.S. inspectors to monitor the country's atomic activity if a new deal is brokered with Washington. Prime Minister Benjamin Netanyahu says Israel has killed the top commander of Hamas in Gaza, confirming early reports. Netanyahu told Parliament that Mohammed Sinwar was amongst a group of senior leaders killed in a recent strike. Sinwar assumed the top combat role in Hamas after his brother was killed by Israeli forces in October. He was considered a hardliner in ceasefire talks. Coming up, the U.S. is moving ahead to revoke the visas of some Chinese students in the U.S. More on the latest crackdown next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. U.S. futures surge as a court blocks most of President Trump's global tariffs, saying they were illegally imposed under emergency law. Upbeat forecast. Nvidia's results stoke market sentiment, soothing fears over China's slowdown with a solid sales forecast. And Aramco exclusive. I sat down with the oil giant CEO Amin Nasser to discuss the global growth outlook and production as OPEC Plus prepares for its next output decision.
We benefit because we do have spare capacity. So more barrels come to the market. For every million barrels, that will have a huge impact on our net income.
Well, it has just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi, back in Dubai after a couple of weeks on the road. But the big news today, obviously, Nvidia earnings, surprising to the upside. But then the major catalyst for markets, as you can see on the screen, a strong reaction there, was this decision out of a trade court ruling that the Trump tariffs, at least most of them, the baseline tariffs and a few specific country-specific tariffs, were illegal. The Trump administration is appealing, but it's going to take some time to settle this case. And on the back of that, we are seeing a positive reaction. S&P up 1.6%, NASDAQ up 1.9%. 30-year yield still sitting shy of 5%, so around 4.98 now, about 1.5 basis points higher today. But 5% has been a key line in the sand for many market watchers in the bond yield space. So keep an eye on the price action there. And then Brent in focus as well. $65 is where we are at, up 1.1%. On one hand, you've got some of the geopolitical considerations with various reports suggesting that Israel are looking to strike Iran directly, even though the Trump administration would not approve of such a move. And then we also have the big OPEC Plus decision coming up in the next couple of days. We're going to talk about that shortly and what that could mean for markets. But today, Brent is sitting at around $65. Now, speaking of oil, Aramco will keep borrowing to fill a gap in its finances as cash flow is squeezed by weaker crude prices. CEO Amin Nasser spoke to me exclusively at the company's headquarters in Saudi Arabia about fundraising and its debt ratio, which has hit a 3-year high. Plus, how the oil giant is prepared for further OPEC Plus output hikes.
We have a strong balance sheet, and our dividend is one of the highest globally. We're expecting to pay dividends that goes to the majority shareholder and other shareholders, which is the government, of $85.4 billion this year. We benefit because we do have spare capacity. So if more barrels come to the market, for every million barrels, that will have a huge impact on our net income. I would say it will give you a $10 cushion for every million barrel that you put into the market. We have today close to 3 million barrels of spare capacity. So other companies do not have that to cushion any drop in prices. For us, we do have that spare capacity that is healthy, strong, and when you put it, it allows you to increase significantly your net income.
So Aramco can sustain lower oil prices?
We can sustain it for different reasons also. We are the lowest cost producer. Our extraction cost is $3, and we still is $3. And with low extraction cost, healthy balance sheets, and our investment that is continue to be capturing opportunities that we have, we can, and the spare capacity that I highlighted, as you put more barrels, you benefit. Yes, there might be a certain impact here and there, but you benefit by the additional barrels. Other producers do not have that additional barrels to put into the market. We do have that additional barrels, and it gives us strong benefit in terms of impact on our net income. As I said, for every million barrels, that's almost an additional $10 for us.
And Aramco has been more actively borrowing in the market the last few years, but still, the last time we spoke, you talked about the low gearing ratio. It's around 2%. Do you see that number moving up to some of your other peers, close to 15, 20%?
Well, our gearing today is around 5%. It's still one of the lowest gearing. It's almost half of the average compared to other energy industry players in the market. And we will continue to tap into that additional bond markets and on the future. But we have a low gearing ratio, which still, as you consider, very low compared to any players in the markets.
Well, that was Amin Nasser, the president and CEO of Aramco. And you can catch more of this interview, a very broad discussion that we had talking about the past, the present, and the future of Aramco on an upcoming Wall Street Week special on Saudi Aramco that is airing next month on Bloomberg television. So you don't want to miss that. But let's talk more about that interview and oil price dynamics. Bringing in Anthony DePaula, our Middle East energy markets reporter. What we didn't play there was the beginning of the interview. I was also asking Mr. Nasser about how he sees oil demand. And actually, they still seem to be pretty optimistic about where growth is coming from, especially some of the signals that are coming through from Asia. And I guess that also mirrors some of the language that is coming through from OPEC Plus as well, especially headed into this weekend.
Yeah, they see the demand positive. They see the market fundamentals still okay. Of course, things have been buffeted by all the geopolitics. You mentioned earlier the tariffs. on-off tariffs, sending the price up and down. Also, some of the geopolitical issues in the region here, the war in Russia as well. So all those factors are influencing the oil price. The point of Aramco is that they still see the fundamentals strong. And in fact, demand does keep increasing year over year. The issue is that we are seeing slower demand growth than some of the previous forecasts had been. Plus, we're seeing a lot of new supply coming into the market from non-OPEC plus countries like the U.S., like Brazil, like Guyana. So now with OPEC plus and that core group of 8 countries increasing production, rolling back their output cuts, that's gaining back a little bit of market share and perhaps taking some of the peak off those oil prices. That's going to stop some of the supply growth in the market. OPEC Plus has pointed to the fact that they don't see stockpiles building in the market. They don't see a lot of oil building up in storage, so they see that as a positive that allows them to increase that production. I was at a conference, a trading conference in Bahrain this week, talking to traders who are also saying, yeah, they don't see that those stockpiles built up yet, so that does give some kind of credence to that.
Some leeway. Yeah. So what are the expectations for this OPEC Plus decision this weekend? Because people are saying that they could once again increase production by another 400,000 plus barrels a day.
Yes, we've got a couple different things going on with OPEC Plus. We had the larger OPEC Plus group meeting yesterday and saying to stay the course with a plan to unwind the group's broader cuts by the end of next year, which they had announced in June of last year. And then we've got that core group of 8 countries that had made some extra, they call them voluntary cuts on top. And they are slowly rolling those back, slowly, but actually now a little bit faster than expected, because for the past 2 months they have added to the market more than 400,000 barrels versus an expected slightly more than 100,000 barrels. So really 3 times as much as they had forecast to the market. So what we're really waiting to see on Saturday when they do meet is whether they maintain that faster pace of increases in production, or whether they ratchet it back and continue to increase, but at that lower level of 100,000 barrels a day. It looks like the expectation in the market is that they will keep going, but we have spoken to some OPEC country participants who hope, for the sake of the oil price, that they slow down. So we will see where that tension lies and where that comes out this weekend on Saturday.
Yeah, I mean, I guess the decision, and at the time we analyzed why OPEC Plus were making the decisions, we were talking about potentially introducing some discipline amongst the members that were overproducing, the fact that President Trump was coming to the region, wanted to see lower oil prices, but also ultimately about regaining market share. And it's really interesting to hear Mr. Nasser talk about their 3 million potential extra capacity that they could actually pump. And it certainly looks as though Saudi Arabia have taken the decision now to start regaining market share that they would have ceded the last few years.
Yeah, so Aramco's got about 3 million barrels a day of capacity that's off the market that they could increase. They are telling the market that 3 million barrels a day, if it comes to the market, allows them to have a lot of upside in terms of profit. Already the oil that they're bringing back, they say on an annualized basis, will have some increase. But, in the first quarter, they were selling oil at closer to $75 a barrel. Now we're still averaging for the year about 70, but prices are in the 65 range now and haven't really budged for a while, despite these intraday bounces. So at that price, even with higher production, they're going to be earning a little bit less money. So they need really to get back into the market, keep that market share. So that's probably a longer-term play from OPEC Plus. They see the writing on the wall from Trump that he wants those lower prices. With everything going on in the market, they feel a little bit powerless to impact those prices. So why not come back in the market, get some market share, and set themselves up better for the future?
Anthony, always good to talk to you. Thank you for rounding up our interview with Amin Nasser, Aramco CEO. That's Anthony DePaula, our Middle East energy markets reporter. And just a reminder, our full episode on Aramco is going to be aired on Bloomberg Television in a couple of weeks' time. That will be on Wall Street Week. Now, Nvidia CEO Jensen Huang is soothing investor fears about a China slowdown by delivering a solid sales forecast. He says the AI computing market is still poised for exponential growth. Let's now bring in Robert Lee from Bloomberg's Intelligence. Robert, strong reaction with Nvidia stock jumping 5% in after hours. What were some of the key takeaways from the earnings report we got yesterday?
Okay, I think as you just said in your little prelude there were some limited concerns about the knock-on impact from the effective ban on H20 chips in China. And whilst there was an inventory write-down of about $4.5 billion, and it impacted Nvidia's revenue by about $8 billion in the quarter, that was largely known and expected by the market. So no negative surprises on there. But I guess, unsurprisingly, Jensen Huang is the chief evangelist for the entire industry, or him and Sam Altman. The message remains very bullish and very upbeat. I mean, in terms of the Middle East region where you are at the moment, we've seen President Trump take a visit there over the last couple of weeks, a number of big deals being signed. I don't think that the strength of underlying demand in AI was ever in serious question, but recent headlines and what Jensen said last night sort of reaffirmed the view that the demand outlook for AI or AI accelerator chips remains extremely strong. And actually, it was the strength of demand on their Blackwell chip that helped to compensate for the shortfall on the China. Not entirely, but I think according to our US analyst, Blackwell sales are about $3 billion ahead of expectations. So that gave the market some, strong reassurance that demand remains very robust.
Yeah, well, I know that as an analyst, you look at these things with a lot of detail and a lot of scrutiny. Are there any details that the market is missing here? Because the reaction has been overwhelming in that it's positive, but is the market missing anything?
Okay, I think that the two biggest questions for Nvidia and maybe the sector as a whole, well, Nvidia in particular is the China outlook. I mean, China's still, a very large market for them. Jensen has been on the media trail recently talking about a potential $50 billion US dollar opportunity. And just to try and very briefly quote some of the things he said last night, he said that the question is not whether China has AI or not. I think, we can see that from DeepSeek, etc. And China is going to move on with or without US chips. So from his point of view, this is a major chunk of business that under the current restrictions from the US administration, Nvidia is effectively closed out or frozen out from. So he's been lobbying hard. He's been lobbying President Trump directly on a personal level. I mean, there's a real charm offensive coming from the business. The question remains as to whether that will be successful or not. He did say on the call that he thought there was a limited scope to further de-throttle, if you like, or reduce the performance on the Hopper chip. So I think there's a remaining big question as to whether Nvidia will find a way around these rules that's both agreeable to the administration. That's one uncertainty I think the market needs to focus on. And then the second issue, which I've mentioned a number of times over the last 18 months or so, is monetization. Again, because how many viewers watching us at the moment are actually putting their hands in their pocket and paying for AI chips, for AI services? I think there's a huge amount of products available for free in the market at the moment. I would argue that the market, a lot of the products are largely commoditized. So the monetization outlook remains the key question for this industry.
Yeah. And increasing competition from China, as Jensen Huang spoke about. So Bloomberg Intelligence, Robert Lee, thank you so much. Well, coming up, the visa crackdown continues. We get the details around the U.S. now turning its sights on Chinese students. That's next. This is Bloomberg. Secretary of State Marco Rubio says the U.S. will begin revoking visas of Chinese students. That includes those with connections to the Chinese government or studying in critical fields. And as part of its wider crackdown on China, Bloomberg has learned the Trump administration is now restricting the sale of chip design software to Beijing. Bloomberg's China correspondent Min Min Lo joins us now from Hong Kong. Min Min, first of all, let's talk about the visa ban. What could be the potential impact on Chinese students?
Yes, it's a pretty sweeping restriction that the U.S. has now imposed, pledging to revoke, aggressively revoke these student visas from Chinese students, especially those with ties with the Communist Party and who are studying critical subjects. And it's not very clear what actually constitutes a critical subject. And there are over 270,000 Chinese students enrolled in the U.S. last year, according to U.S. State Department data. And many of these students study in science, tech, engineering, or the math field. They are the second largest foreign student body in China after India. And as part of broader restrictions, the U.S. is also saying that they are going to revise future visa criteria for applications for people from both China and Hong Kong as well. So a lot of people are going to be affected. Chinese parents and students are watching this very closely. And it's not just the students. There's also this very big education consulting business in China as well. These are professional organizations that help the students to study for SAT and help them understand the educational landscape in the U.S. And the big question now is what happens next and whether the U.S. federal court will be able to intervene, because when it comes to the Harvard case, for example, the federal court was able to win a temporary reprieve for the university to continue to accept foreign students for now. So a lot of questions around how this is eventually going to be implemented.
Well, now they're looking to cap the total number of foreign students that they accept. So that story continues. Let's talk about the chips ban. What are the new rules? How do they differ from the already existing chips exports ban?
Yes, this is now a restriction on the design software for chips. So the U.S. Commerce Department sent a letter to a few big providers of these electronic design automation tools. The big companies are Synopsys, Cadence, as well as Germany's Siemens. And these three companies combined, they make up about 80% of China's EDA segment. So it's a pretty significant impact. And while they constitute a rather small proportion of the overall chips business, these companies, they are in the upstream portion of the supply chain. The curb on the design process could impact the downstream manufacturers and their ability to test and develop new generation of chips. And these are design software that are used for everything from the designing of high-end processors used by Nvidia or Apple, or even the smaller parts, the parts that are used to regulate power, for example. So a huge impact. While Chinese designers do have their own capabilities, they do rely on these foreign software for the design of high-end chips. So again, an escalation of that curve from the manufacturing equipment to the high-end chips and now to the design software as well.
Min, thank you so much. Min Lo, Bloomberg's China correspondent. And coming up, Nigeria is looking to raise $24 billion in external borrowing as the nation looks to boost growth. The details next. This is Bloomberg. Nigeria's President Bola Tinubu has requested approval from lawmakers to raise almost $24 billion in external borrowing over the next 2 years. That is aimed at funding projects that will spur economic growth. Bloomberg's Ndiro Ganga joins me now from Kigali. Ndiro, talk us through the government's new borrowing plan and what it could likely mean for the economy. More borrowing, but I guess with the view of productive investments.
Absolutely, Jumana. The government is trying to inject growth and vibrancy into the economy. This is one of Africa's biggest economy, a population of over 200 million people. And if you look at the areas where they want to pump in this money into energy, food production, in agriculture, healthcare, and also infrastructural development, and this just shows you their development roadmap. There has been years of underinvestment and mismanagement. And so the current infrastructure is feeling pressure and leaving glaring gaps to develop new infrastructure. But the government also says pump the brakes. This is just a borrowing plan. It's not going to affect debt to GDP ratio. It's not going to increase the debt burden in the country. But there's also something to be said about the fact that this government was very, very ambitious. If you look at this year's budget, they pegged oil at $75 per barrel. They were hoping to produce 2 million barrels per day. Unfortunately, currently, they're only doing 1.4 million. And also there's volatility in the international market. So it means that weaker oil prices will be weaker revenue, and they have to explore different ways in which they'll raise revenue for development and fund these projects.
Yeah, not so dissimilar to Saudi Arabia from that perspective, looking to borrow more. But today marks 2 years of President Tinubu in power. How have his reforms impacted the country so far?
Jumana, this is a question that is a bittersweet for Nigerians because on one end, these executive reforms have led to some positives. We saw him devalue the currency, try to merge and reconcile the parallel and the official rate in the country. They've also been aggressive hiking of interest rates to manage inflation in the country. And also, this is a place where the president, in his first day in office, removed subsidy on fuel and also electricity. The government says they've been able to save over $1 billion, which they intend to pump back into small businesses. Inflation has come down. But if you ask ordinary Nigerians, households are yet to feel this relief. Fuel subsidies affected transport costs and affected costs of basic goods and services. And the macroeconomic indicators are yet to reflect any relief. GDP growth is also yet to reflect that relief that the government is working towards. So the next 2 years, people are hoping that they can find relief in this administration. And also the administration is hoping that these reforms can be able to reflect in the larger economy.
Bloomberg's Andira Ganga, always a pleasure to talk to you. Thank you so much for the reporting on Nigeria. Okay, quick look at futures. Why? There is a lot of green on the screen this morning. Take a look. S&P futures up 1.6, NASDAQ up almost 2%, reacting to Nvidia earnings, but also that ruling out of a trade court in the U.S. that the Trump tariffs, at least most of them, were illegal. So big driver for market price action today. The reaction in equities has been positive so far, but let's keep an eye on developments in that space. That is Horizons Middle East and Africa. I'm Joanna Bersacci, back in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.